We get questions with some frequency about this little spike that shows up in a number of capital gains range calc charts. So right here I'm in the capital gains section. Over here to the right of that spike, this makes sense, right? I'm adding extra capital gains and it's either going to be taxed at 15% as it is here or 20% as it is here. There's an extra 3.8% in this case of net investment income tax. And if I go back this way, there's no impact of adding capital gains, either because I'm below the threshold, the income threshold, or maybe I have a loss. And so adding capital gains just means less loss, but still no cost to that. And that's a hint actually to what's coming when we talk about this sliver where it's actually much higher than 15 or 20%. And also it shows up blue, which is ordinary income tax. So why is that? Well, the first hint as to why that is the case is if I scroll up and look at the ordinary income chart, you'll notice that I am in the 35% ordinary income bracket. So what's happening down here is something is happening to cause me to add ordinary income in my current tax bracket. And so what's happening here is recall that up to $3,000 of capital losses can be used to offset ordinary income on the tax return. And so what happens is if I'm in that range, and in this case, this particular client has some sort of capital loss. And so if I add capital gains to that loss, let's say it's negative, it looks like it's about $14,000. If I go from negative $14,000 to negative $3,000 by adding $11,000, that has no impact. But once I hit that negative $3,000 level, so at the point where I went from negative 14 to negative 3,000, now as I add capital gains, I'm actually removing an offset against ordinary income taxes. And so what happens is in that little $3,000 sliver, as I add additional capital gains, I'm in fact releasing more ordinary income to be taxed. And that's why in that little $3,000 sliver, it's always a tiny sliver like this, within that, I am going to see a spike that is going to be at my marginal ordinary income bracket. Now, once I've added enough capital gains that I get to zero, essentially, so no loss, then I'm in a period where it's going to behave like you would expect capital gains to behave. So adding more gains is going to be taxed as capital gains. But within that $3,000 sliver, negative $3,000 to zero in capital gains, so a $3,000 capital loss to zero, it's going to be treated as if I'm offsetting ordinary income and therefore I am being taxed. The marginal impact of adding capital gains is going to be a cost that is my ordinary income marginal rate.